What's going on in the fertilizer industry these days? What's the big news? What are the big updates going on?
Oh, the big update. So the big update currently is India came back to the market for 1.5 million tons of urea at a time where there is not ample supplies of urea globally at the moment. So they've been shorted every tender in the last year. So come for 1 million, get 700. Come for 1.5 million, get 800. So they don't have an abundance of stocks to go forward. And with a pretty healthy monsoon season upon them, demand will be high.
So is this a normal time frame for them to come in to secure urea? Is this out of the ordinary?
No, this was expected. Definitely expected. Okay. So at a time where markets are high, it's just a little more bad news for a buyer.
Yeah. Okay. Fair enough. So you look at the current situation here, the current supply situation. Is there a little dip happening at all right now? Like I guess we probably don't know this tender result yet, but do we expect a little bit of a dip here that they could buy at a little bit lower value, or what are you thinking on that side?
No, it doesn't feel like there'll be any deals to be had for India at the moment. In North America, we've seen NOLA urea barges come off near historical highs in the last couple of weeks. So that's great, but it reached a point where it was over $1,000 Canadian a met to import American urea this spring. Crazy numbers.
Wow. So if we talk about the spring for a second, I have a few, friends that work in the industry, and the one kind of surprised me. She put out a picture saying that they finally got some urea in, and I didn't realize that there had been a little bit of a mess going on here with maybe production, or I don't know if it was logistics, but what happened at the end of the growing season here with that delay or that gap?
Yeah, that was this situation was a long time in the works. Unfortunately, domestically in Western Canada here, we had 2 of the major urea producers have unplanned outages and extended unplanned outages, which forced an allocation situation out of 2 of them. So that was a mess in Western Canada. And coming out of the U.S. early in the new year, low river levels prevented barges having easy access to river terminals to unload, reload on rail and ship.
Okay.
And then as we got closer to spring, high water levels impacted barge unloading as well. So I almost want to
one or the other, hey?
Yeah, it was like the perfect storm. And then railways were just not performing. So we had a small train of urea that was due to ship April 17th, end up shipping May 17th. And we just received it the last few days of May.
Oh, wow. Wow. The values I saw here, I had a few, clients that I was that checking in with that needed that extra 20 ton or 30 ton or whatever it was. Those values were just under $1,100 a ton at the end.
Absolutely. And if you were a retailer buying spot urea at that time, there wasn't that much margin in those deals. Retailers were paying well over $1,000 for any ton of urea that they were scavenging at the end of season.
All right. So switching gears here a little bit to maybe the summer. Again, I like to be, quite planned. My crop plans are already starting to form for next year, things like that. Often our farm fills, we use liquid nitrogen, so we tend to fill in the summertime. We had a bit of a mess on sulfur, right? Sulfur prices were pretty bonkers this past spring. Phos prices were, last time we were on the show, you were talking some big numbers there that happened. Is there anything here that's changing yet from a supply side that could lower some of these values, or where are we at for this summer?
Well, I'll just start by saying I feel like I should just put my phone on Do Not Disturb for the next month, because there's no good news in the fertilizer market to indicate any sort of correction in the next 30 days for sure.
Okay.
I'll just go through the products quickly. Like nitrogen,
everybody's
empty. So there's huge warehouse space to refill for manufacturers. They're under no pressure to come into the market and offer tons. And we are seeing one of the largest facilities in Western Canada go down for approximately 85-day turnaround this summer, which is going to take about 200,000 ton of urea out of the market. So in Western Canada, we're not going to feel that push from suppliers to fill warehouses and give discounts. In the U.S., we're seeing, again, really low inventories, obviously high acres of corn planted. Corn is a crop that gets fertilized more than once as far as nitrogen goes. We're seeing really high UAN prices in the U.S. UAN prices on a percent pound or on a pound of N are 25% higher than urea. So that's going to draw some side dress nitrogen applications to granular urea versus UAN, which is going to keep demand high longer for that product. So, right now for us to import urea into Western Canada, it's like a mid-7 to high $700 number. I don't feel that's appetizing as far as an affordability. Affordability goes to the grower. So, that's nothing that we're getting excited about. On phosphorus, that's a huge mess. China has restricted exports again of phosphorus this year going forward. So typically a 9 to 10 million ton export country went down to 6.5 last year. This year they're talking 3.5 to 4, maybe just over 4 million tons. So that's a huge amount of volume taken out of the market that didn't have anything to give. So coming out of spring, we've actually seen phosphate prices increase. The only thing that fixes that market in the medium term is demand destruction. We need the U.S. grower to pull back on their fall application rates. I can't see myself and I would not encourage growers to be looking at stepping in on phosphate at this time. We've got carrying costs are a real thing when values get this high. So cost of money is high. We're looking at a Canadian dollar that probably has some legs against the U.S. dollar sometime in the next 12 months. So that's going to be beneficial for buying imports and bringing fertilizer prices down. So my opinion is phosphate is a wait and see product.
What's phos at roughly right now? Is it
it's not 1,300 or it's not $1,300 yet to import into Canada, but it's not very far off.
So China, is that just they're keeping more in their country, keeping more available for themselves? Is that basically it right now? Nothing on the production side really to impact this? It's just keep it home?
They're keenly focused on keeping the cost of food low for their people. And for them to do that, they need to keep the cost of production low for their farmers. If you look at the cost of their nitrogen and phosphate, it's substantially lower domestic China versus anywhere else in the world.
Okay. All right. And what about, did we talk sulfur yet? What are you seeing on that side now?
Yeah, sulfur prices, to say that they got out of hand would be an understatement.
Last time you were on, the number you threw out was like, I had to clean my ears out and come again because it was going to get scary there.
It did. Like retail prices for sulfate were, just under $900 a ton across the West.
Wow.
That number, I think, got a little overblown, mainly by the producers. You felt them having inventory at the end of spring. The only product that they had inventory of at the end of spring was sulfate. I think they saw a little bit of demand destruction in the U.S. as sulfur is just kind of a newer nutrient on corn acres. So they didn't get the uptake they quite needed there. Repatriated some tons, and I don't know. Canola acres, I think, perked up. We noticed a lot of walk-up bags in season, guys adding a quarter or two, but I don't think the canola acre is an overwhelming number across Western Canada. So I think demand was a little underwhelmed there, but better than it was going to be in January. So that being said, if there's one product there might be a little hope in is sulfur, but it's such a minor nutrient in the scheme of things, it really doesn't make a big deal to a grower's income statement. That being said, we won't see sulfur correct to previous lows. The price of raw sulfur has went up quite a bit over the last year and doesn't show any signs of weakness.
Okay. What about potash? Potash must have a good story for us.
Sure.
Something stable,
yeah,
right?
potash is stable. As far as affordability goes, is probably as good as any of the nutrients. But if sulfur doesn't make any difference to the grower's income statement, potash definitely doesn't. So, I think we could see potash prices in the 600 range, low to mid, high 600s, but nothing extravagant. And I would call it boring. And boring is good in our business.
Exactly. Yeah, I'll take boring after those last three. All right. I want to switch gears now to maybe just globally. We talked tariffs last time you were on. I can't remember the exact date of your last time on the show, but it was right, I think, before any of the tariff stuff was going on. I guess, between US and Canada, nothing really new there on the fertilizer side that I can see. But globally, is there anything, maybe trade or tariff, to touch on here in early June?
Yeah, for sure. Western Canada, our price is set by the U.S. market. The Western Canadian price is set by the U.S. NOLA barge market. Plus import economics sets the Western Canadian price, and we'll be plus or minus an import economic number depending on the time of the year. Obviously, summer fill, we typically trend slightly lower than import economics, and in spring we decouple and typically it goes higher. What we're seeing now is, the 10% reciprocal tariff that Donald Trump applied to other countries is in essence blocking a lot of nitrogen and most phosphorus imports into the U.S., which is pushing the NOLA barge market higher or stopping it from coming down. There's just so much volatility in that. Just specifically to nitrogen, the Court of International Trade struck down the 10% tariff, and then the day later, an appeal court reinstated it. So that's going to go to the Supreme Court. So there's just a whole unknown about this 10% tariff so that's blocking, imports from everywhere on nitrogen except Russia for somehow. And I don't understand that unless it's a ploy to maybe soften talks with Russia, Ukraine on the truce that they're hoping there. But, to have Russia as one of the only countries unaffected by a reciprocal tariff is ridiculous.
Yeah. Interesting.
Yeah. And then you got phosphates. I mean, there's countervailing duties on North African and Russian phosphate producers. That in essence blocks them. That's probably an average of a 16% tariff on phosphates plus the 10% reciprocal tariff if it applies to a phosphate exporting country. So that's blocking all phosphate imports into the U.S. And, that's why we see phosphate barges trading at $725 for a U.S. short of MAP, which is a crazy number. And I think it's like one of the second worst as far as affordability goes in the last 2 decades of phosphate. So, these tariffs and countervailing duties, the protectionism is just bad news, and it's unpredictable right now, and it just adds so much risk to buyers.
Yeah. Well, it's interesting that you look at how you look at that. I was looking. This is off a little bit of a bunny trail here, but fertilizer costs for U.S. farmers, very high as well, right? But farmer sentiment right now on the outlook is high. It skyrocketed here in the last update last week. And so it's kind of interesting to see that farmer sentiment being high. And some were saying, well, I don't know how many billions of dollars, Trump dished out there, but that could have been part of it. It was also, the survey was done right around a pretty big bull run in corn in middle of May there. So that could have been an impact as well. But like these inputs being as expensive as they are, this is pretty tough compared to where commodity prices are at, grain prices are at. So I like to spin in some positivity here when we can, James. What do you got from the positivity side? Like, obviously we're going to stay patient right now because it doesn't seem like there's a deal to be had out there, but is there some positivity that you can look at? Higher Canadian dollar. You did mention that one. Yeah.
As our dollar goes higher, every cent our dollar goes higher, depending on the nutrient, reduces the cost of the product $7 to $10 a ton. Right?
Okay.
So if we were to see a $5 or $6 5 or 6 cent improvement in our dollar, $35 to $50 a ton lower fertilizer prices. So that's positive. I guess money in the bank is always positive for our business and for growers as well. And we don't look like we're going to be writing any checks soon to fill and go to market. So I guess I suppose that's good. I guess there's a bit of a weather market happening in grain prices now. It looks like maybe higher grain prices to come. If you get rain, that's a good thing.
Yeah, we've been looking at a lot of weather stuff the last week or so, and next week, so we're recording this June 4th. Next week, there's a big event coming through the prairies, fingers crossed, knock on wood, all that good stuff. But it is needed. We had a lot of farmers responding to the show here the last week or so saying, my crops are hanging in. I'm pretty happy with how my crops look today, but I need that rain. I need that rain to come through. So yeah, wheat prices are up right now. Canola prices are trying to find some support in the high sixes here as well. So we'll see what that looks like. All right, James, anything else that we haven't touched on here today? We covered a lot of different things. We talked global, we talked Western Canada. Is there anything else that you wanted to shed some light on here today?
I don't think I do. I'm just really just trying to keep my head down right now. And, we're recovering from spring. We've got some planned maintenance on our facilities. Our trucks are kind of taking a breather for the month of June. It kind of looks like. So I think maybe it'd just be a quiet summer.
How did you feel that, for Crop Management Network, how do you feel your spring went? Like I know you guys spend a lot of time and energy on efficiencies and logistics and working, hand in hand with your clients, your farmer customers. But how do you think, if you had to review the year or grade yourself, like how did it go for you guys?
We were extremely happy with how our spring went. Having our own trucks, having dual service rail, having a decent size fertilizer storage and infrastructure and blending capability. None of our customers missed a beat when it was coming for fertilizer. In fact, we filled some gaps from other companies where they ran short and customers couldn't get their product, or a customer went over their prepay and they were turned away from their current retail, and we were able to fill those holes. So we felt like we did our job, and our people performed admirably. So super proud of our people in our company.
Awesome. Good work, James. Well, that's a nice positive way to end this segment. So here's what I want to do. When there's a move and a shake in that fertilizer market later this summer, if it happens, when it happens, let's get together again and talk about what's going on. All right?
Yeah, we'll do that for sure.
Perfect. Thanks, James. Have a great rest of your spring, and have a good recharge here after a busy spring season.
Okay, thank you.